It's June now. We started a new trading month this week. It's been kind of a painful year for investors in all risk assets. But looking back on the past few months, what do you make of the bearishness of the market, particularly in crypto?
A few months ago, we were talking about how the actions of the Fed probably cause all risk assets to go down, and they actually have. And it doesn't look like the Fed is going to let up anytime soon. They have a mandate to continue to fight inflation, and inflation is extremely high right now. The CPI prints are in the 8% text mark right now, and real inflation is probably much higher. So the Fed is going to continue to raise rates. And they've actually stated that they would raise rates despite the fact that markets could go down and will go down. So not only have markets gone down, we expect the markets to go down even further. I think the S&P will probably hit the 3,000 range before it potentially bottoms. And when we're specifically talking about crypto assets, all the crypto markets could go down another 30% as well. So we could see Ethereum down to 1,400. We could see Bitcoin at 22,000. And really, this is no different than any other period of time where the Fed has tightened rates. All risk assets will suffer through the tightening.
What do you make of the health of the crypto market today?
I think the crypto market is very healthy. I think Bitcoin is also very healthy. Those of us who have been in this market for a long period of time are used to prolonged periods where Bitcoin prices drop. It usually indicates a time of building, and Bitcoin is very tech driven, and we've seen a lot of people build during these periods of time, whether that was 2013, 2018, or even now. The amount of pullback that we've seen in Bitcoin and other crypto assets really isn't unusual for those of us that have been around here for a while. By the way, even in the equity markets, you don't see a lot of panic right now. Even though NASDAQ is down 30%, S&P is down about 20% from the peak, you're not seeing people panic like they typically do when markets are down like this, which tells me that markets will continue to go down and that they were probably a little bit overinflated anyway.
Give me a timeline for all this. You just said that crypto prices could go down even further. What do you see specifically happening for the second half of the year? Do you have an idea of when we start to reverse and go back up?
Well, typically markets do, go flat during the summer, and this summer is going to be no different. There's a reason for the old adage, sell in May and go away. We expect that all markets will just slowly melt throughout the summer, and sometime probably in September or October is when we could see markets start ticking back up again. Our expectation is that the Fed will continue to increase rates by 50 basis points in both the June and July meetings. And then in the September meeting, because there's not an August FOMC meeting, we will either see them pause ahead of midterm elections or have to reverse course if the markets have shrunk enough. I don't expect them to reverse course. And by the way, the September call could happen in October as well. But likely, if there's enough pain ahead of midterms, we will see a little bit of pressure on the Fed to hold off for a period of time.
So where can investors find some safety in a period like this, particularly among crypto assets?
Yeah, among crypto assets, we're probably looking at just stable coins. And by the way, not algorithmic stable coins that don't have a one-to-one backing of assets like cash. So we're seeing a lot of people move into stable coins like the Gemini token or USDC, and slowly earning some yield in some safer platforms at the moment. A lot of buyers, though, and fund managers are buying at these levels, though. Even though we expect markets to go down further, you typically don't want to try to time a bottom. So if you're seeing value in a certain crypto asset, legging in at this period of time isn't entirely bad if you've been on the sidelines, which we have been.
They're buying into other cryptocurrencies, you're saying?
Absolutely. So, Bitcoin, I think even though Bitcoin could go down to 22,000, it's still a great buying opportunity here if you're slowly moving in and dollar costing into Bitcoin. We also are looking at Ethereum. There could be issues with Ethereum and the crossover from proof of work to proof of stake, and we're very cautious about that and watching it very closely. But despite the fact that Ethereum could go down further from here, um, you know, again, we don't try to time markets. We try to look for value, and as long as there's value, we will slowly move into that value.
A lot of people saying that crossover is a long-term good thing for Ethereum, though. Do you agree?
Well, we'll see. There's two different ways to look at it. First of all, moving over to proof of stake, uh, and all the other features that are changing in Ethereum 2.0 does make it a more efficient network to run applications on top of, but it could affect security. Proof of work has proven to be a much more secure way of securing a blockchain network. So it would lose some of its security features over other protocol blockchains. So we'll see what happens there. At the same time, Ethereum does have a long life cycle. We'll just have to watch and see. But we are watching it very closely.
All right. Going back to stablecoins, can you just go a little bit deeper on why those are such good opportunities at a time like this?
Absolutely. Well, the news for the last month has really been around Terra or UST, which was an algorithmic stablecoin that wasn't really backed by any other assets other than the ability to print another token called Luna in order to support the price of a dollar on an algorithmic basis. So that was quite a scary situation that we really approached with caution, and for the most part avoided that whole fiasco. Now, for other stable coins like the Gemini token or USDC, really what makes those favorable is that they have a one-to-one relationship with dollars in the bank. And so anytime that you want to redeem, you can get your dollars out, and you can stake that or lend it out, much like you would with repo, reverse repo, and earn a yield back. And that yield is considerably higher than, say, US Treasuries. The problem with moving into US Treasuries or high quality bonds at the moment is, as you've seen from the last 6 months, or a little bit less than that, since October, treasuries and other bonds have lost a lot of their value as far as price goes. So if you're holding bonds, yeah, you might get a little bit of yield, a little bit of safety, but the price has gone down. For instance, 30-year bonds have been down 30%, and that's 30-year US Treasuries as far as price goes. And if the Fed continues to raise rates and yields continue to go up, then that means prices for bonds will continue to go down. So you might have a little bit of yield, a little bit of safety, but you lose principal. In holding stable coins, you're essentially holding cash or something that represents cash and earning a yield on that protects you during a time when most risk assets are dropping.
Real quick, for people who have heard about stablecoins, but maybe they've dabbled in Bitcoin and Ether, but haven't jumped into stablecoins yet, what are some of the risks that they should be aware of?
Well, there is some regulatory risk behind it, right? So there are certain stable coins out there that are traded and utilized outside of the US. So there might be some KYC AML issues at play that could be ripe for regulation. And even the ones in the US, there could be laws or regulation that prevents you from utilizing them. So that is something that you always have to be cautious of and aware of.